Maybe you've heard about becoming your own banker, but you're not sure what it's all about. Today, I'm going to keep it simple and explain the infinite banking concept in 5 minutes. Every day we participate in banking, never stopping to think how much money flowing through our hands is making someone else rich. But what if you could imitate the bank and profit from your own system? Check it out. You have an income. It may come from a variety of sources, but once you receive that income, you have to store it somewhere, and that somewhere is in the bank. We accept that a little bit like the air we breathe. We do it without even thinking about it. Once we have the money, we either save it, spend it, invest it, or give it away. But let's consider what happens to your money while it's in the bank. As soon as the bank receives it, they put it to work. They believe in the velocity of money. That is the idea of flipping money over and over for a profit as many times as possible. They do this by lending your money out to others at interest. They might lend it out as a home mortgage, let's say at 6%, or for a car purchase at 8%. Maybe they will lend it in the form of a credit card for 16%, or something like a home improvement loan at 10%. Meanwhile, they might give you somewhere between 0.5% and 4%. I'll be generous and say 4%. Now, if we add up the rates at which they lent out your money, that's a total of 40%. If they gave you 4% for the use of your money, what is the rate of return the bank earned? They made a whopping 1,000%, and the profits go to the stockholders of the bank. Suffice it to say, banking is the most profitable business in the world. But what if you could imitate the banks in your own personal economy? What if you could become your own banker? Well, you can. Next time you have an income, before you spend it, you could change the environment in which you store your money. Think of the bank a little bit like a warehouse. Only this time, it's going to be your own warehouse. And while there may be many products out there that you could use to implement the process of banking, the most efficient and beneficial one we have found is a specially designed, mutually owned, whole life insurance contract. Then you can continue to spend your money as you would have. You didn't work any harder or make any more money. But here's why it changes everything. When you store your capital in one of these special policies, the life insurance company puts that capital to work for you, and they bear all of the risk. But now the profits no longer go to a stockholder. Since you're a co-owner of the life insurance company, the profits are shared with you by way of dividends. By contract, your money is now guaranteed to grow. There is zero market risk. You can leverage it. It's liquid, so you always have access to it. It's creditor protected in most states. And it's private. That means even when you borrow against it, none of your loans show up on a credit report. But maybe best of all, it also comes with a death benefit, because it is, after all, life insurance. And that death benefit transfers to your heirs tax-free, making legacy and estate planning a part of the package. So how does this all work? Well, it's a little bit like a mortgage. When you buy a house and make a mortgage payment, you begin to build equity in the property. When you have enough equity, you can use that as collateral and borrow against it with something called a home equity line of credit, otherwise known as a HELOC, from which you can spend that money for the purchase of another property, maybe some home improvements, or pretty much anything you want. With a properly structured life insurance policy, when you make a premium payment, you build something called cash value, and over time, that cash value grows. And like the example of equity, you can collateralize your cash value and borrow against it. Again, to be used for anything you want. The difference is with the HELOC, you have to be approved by the bank. It does affect your credit score, and the bank sets the payback terms. But with life insurance, you don't have any qualifications or approval process. It doesn't affect your credit score because it's completely private, and you get to decide your own terms and payback schedule because you are your own banker. You now have a place for savings with guaranteed growth. You can also use it now to pay for the things you need in life. And you have protection for your family. In this way, every dollar now works in at least 3 ways, creating your own velocity of money. If you choose to use these dollars to pay off debt, buy another cash-flowing asset, or lend out at interest, you can create a 4th use of the same dollar, imitating exactly what the banks do. Now, I'm sure you will still have questions, so reach out to me at www.buildsmartmoney.com, and I'll be happy to schedule a free, no-obligation consultation with you. And now that you know a little bit more about becoming your own banker, remember, your money must reside somewhere. The question is, will it be in your own bank or someone else's?